Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 9th of October, 2017, ending Friday the 13th. Hope you're having a good trading week last week. Let's look at the ES front month futures contract. We were up this week. Again, a couple points, and it was just a slow drift. One of the most boring opening weeks of a fourth quarter I can recall in 20-some years of trading. Very narrowly contained each day, intraday. We'll look at the intraday action in a minute. Let's go through the major indices. Then we'll go through the intra-week action, and then we'll talk about what's coming out in the week ahead. Crude oil down $1.51 to 49.29 on Friday. Gold up $1.70, which is just a blip. S&P cash index down $2.74. NDX, the Nasdaq 100, up 743. That negates the risk line. So if I got a projection with a 13 sell signal, we've now killed. See the risk line goes dash there. Killed the risk line of that sell signal. So that's the sell signal is now out of play on the NDX. SOX up 5. That's a new closing high on the SOX. Biotech's down 8. The VIX gains 46 cents, strangely, to 965. This is unusual for it to gain when the market's just drifting it up. Trend closes at 0.95. That's a low reading. The 10-day moving average is under 1. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If you count 10 days back, number around 1 and a couple of low numbers about to drop off. So I don't see us getting down to the 0.85 level on the 10-day anytime soon. Nasdaq volume only 1.75 billion, the lightest of the week. It was the first day this week that we had a volume warning. Volume was actually decent this week, usually around 1.9 billion shares, but the action just wasn't there. Here's the interesting bit. Advanced decline ratio on the Nasdaq was negative 49. But on the New York, it was negative 788. A lot. This is the worst advanced decline we've seen in a long time. In the middle of the market's recording slight, up, slight to flatly up. Flat to slightly up. There we go. Google was up $8.45. What looked just a week or so ago like it might threaten to break down into that gap. Now back near highs after their announcements this week. Apple down 9 cents. Amazon up $8.73. Netflix up $3.63 to new closing highs on Netflix. Tesla up $1.55. TLT, the 20-year bond ETF, down 35 cents. Goldman Sachs down literally 4 cents, just a blip there. All right, let's take a look at the intra-week action. So we'll switch to 10-minute candles. And this is just really, it was one of the worst trading weeks I've seen in terms of action. Thursday had the most, and it was almost over lunch. Monday, we had a slight gap up that did not fill. Remember, these gaps didn't fill. A couple of these gaps didn't fill this week. That's not good. That's not healthy. Which means we're probably going to have to go back and fill them. So the slight gap up and push, but then just dead flat for the rest of the day. Tuesday, very tiny gap up that did fill. And just look how small those candles were on Tuesday. Just horribly. And the volume just died off and never came back. Wednesday, a flat opening. First hour and a half was dead and then drifted up over lunch and then dead flat in the afternoon. Thursday, a slight gap up that never filled, dead flat for 90 minutes, and then actually almost 2 hours, and then drifted up again for about an hour, and that was it, dead for the last 3.5 hours of the day, basically in a 3-point range for 3.5 hours at the end of the day. And then Friday, just horrible, the whole day spent in this narrow range. So that is not pretty. The Nasdaq side, not much different. It had a slower start to the week, actually. By Wednesday, it really hadn't gone anywhere, and then gapped up Thursday and moved, and then Friday dead. So this is not an exciting market, unfortunately. What we've been waiting for here in the market to get it interesting in the fourth quarter has not yet transpired, and that's disappointing from a trading perspective, even though we had a good week in futures and stocks. We had some stocks that worked, enough of them, and certainly the futures were positive for us. All right, let's take a look at the economic data. So Monday is a bank holiday. The stock market should not be open. You don't need to show up. It's going to be a really dead market with the banks closed. Banks closed, markets are open. That happens 2 times a year, Veterans Day and Columbus Day, and it is a waste of time, generally speaking. There's no calls in our stock report for that. And if Rich and Mark want to show up and see if anything is going on, that's fine. But especially given what we've just seen this last week, you should have maybe a 1.2 billion share day on the Nasdaq. That's virtually untradeable. So I wouldn't, professionals probably don't even show up on Monday. Tuesday, we've got the NFIB Small Business Optimism Index, the Red Book at 8:55 a.m. Wednesday, MBA mortgage applications at 7, JOLTS job openings at 10. Thursday, the weekly initial and continuing jobless claims an hour before the bell. We have the PPI with that. We've got natty gas an hour into the market. We've got petroleum reserves, the oil inventories, an hour and a half in. That gets moved from Wednesday to Thursday because of the holiday on Monday. And then on Friday, here's the bigger part. CPI and retail sales an hour before the bell. Business inventories and consumer sentiment 30 minutes in. That's it. I'm on vacation all week. There may or may not be reports on any given day. Rich, Mark, and Craig will be in the room calling it as they see it. And I will not be doing YouTube previews during the week. So there will be no more YouTube previews until next weekend, just like this one. Taking a week off, something we rarely do here at TradeSight. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.